You may have seen the latest ARK Invest stock predictions if you're familiar with Tesla and the financial markets. Tesla Incorporated shares are expected to double, more than quadruple to 4,600 by 2026, according to Kathy Wood's ARK Investment Management. The updated ARK model was released on April 14 and is more than 4 times today's price. Last year, ARK predicted that Tesla stock would reach $3,000 by 2025. However, he later revised his forecast due to his new assumptions about the company's potential robotics business and capital efficiency. What are these assumptions, and how exactly did ARK arrive at these new numbers? Keep watching to find out. While many people around the world, including those working in government, oppose Tesla's full self-driving capability, ARK is growing more optimistic about it as a result. Tesla's potential robotaxi company is included in the latest future value of investment companies. According to ARK, Tesla shares could be worth $4,600 by 2026. In a previous analysis, the company predicted the stock would reach $3,000 by 2025. By 2026, the bullish case forecasts a price of around $5,800, while the bearish case forecasts a price it is approximately $5,800, $2,900, which is more than 3 times the current stock price of $1,005. ARK estimates that Tesla will nearly triple in value even in the worst-case scenario by 2026. To that end, ARK said, "Although calibrated against our 2026 forecast, we believe our Tesla model is systematically conservative. We assume Tesla stock will trade as a small-cap company rather than a high-cap growth one in 2026." Analysts take into account a variety of fundamental aspects when setting target prices. While some analysts are taking into account Tesla's potential for full self-driving and its prospective robotaxi business, many are not. This is likely due to the technology's lack of features, despite CEO Elon Musk's repeated promises that it will be ready by the end of this year. Regardless of Musk's extremely optimistic tweets on social media, there are still a lot of unknowns regarding the experimental progress of FSD and the possibility of Tesla starting a robotaxi. Tesla's ability to build and deploy a network of self-driving robots is crucial to ARK's bullish thesis on the company, according to ARK's research. The taxi network will provide an Uber-like service to transport people to and from different locations. According to ARK's simulation, electric vehicles are expected to account for 57% of the company's revenue in 2026, albeit at a lower profit margin than robotaxi revenue. The revenue gains attributable to this model's EBITDA are broken down by business line below. The company's robotics operation, according to ARK Invest, will account for nearly 60% of estimated value and more than half of its planned EBITDA in 2026. At the Cyber Rodeo, to honor the opening of the Texas Jaga, Tesla's CEO said Elon Musk said that such a service is in the works. Before we explain ARK's current target price, it's worth noting that previous iterations of ARK's forecast models have raised investors' doubts. Wood has been a longtime supporter of Tesla and its CEO Elon Musk. Although the leading ARK innovation AVF cut its stake in Tesla last month, the electric car maker remains the fund's top holding, accounting for 10% of its assets. In early 2018, ARK CEO Kathy Wood predicted a price target of $4,000, which is $800 after a 5-for-1 split before the massive stock price increase and the pre-split expires. Tesla's stock price is currently around $5,000 at the pre-split price, or $1,000 at the post-split price in mid-April 2022. In early 2018, many people couldn't believe the price. In early November, Tesla stock hit an all-time intraday high of $1,243.49. The stock has been under pressure since the beginning of the year due to macroeconomic concerns, component shortages, and inflation in input costs caused by the Ukraine-Russia war. The stock was able to recover during March and early April. After bottoming out in late February, Tesla stock fell nearly 3% on Friday after Musk announced his bid to buy Twitter. Shares closed at $985. A $1,000 investment in Tesla stock at Friday's closing price would have yielded 1.02 shares of Tesla stock by 2026. If the stock is held for the next 4 years and reaches ARK Invest's target price, it would be worth $4,692. This equates to a return on investment of 369.2%. When looking at ARK's research, it is important to keep in mind that they used a statistical model to create a variety of situations. Assumptions regarding important business variables, such as the number of cars sold, the average selling price of those cars, etc., are used as inputs for those scenarios, and the result is probabilities for different situations based on the assumptions. The most important point to remember is that this strategy is it is entirely based on Tesla's car business and robotaxi possibilities. However, some items were not included in the model. For example, Tesla's AI as a human-like service robot and the company's renewable energy business. From ARK's perspective, it seems logical not to include these business components in 2026 because they all involve a level of uncertainty, which could lead to excessive volatility in the model. For example, Tesla has prioritized its automotive business in recent years, and this may continue in the future. This is primarily due to the availability of batteries and limitations on scalability. Furthermore, the solar industry relies on third-party installers, which makes scalability more difficult. According to Elon Musk, Tesla's software, including its AI training systems, is open to licensing as a service, but no potential partnerships have been announced yet. It is also difficult to predict the timeline of a humanoid robot. Tesla has struggled in the past to develop artificial intelligence based on its vision of full self-driving. When repeating different models, they always seem to hit a ceiling at some point. The vision-based AI that Tesla is currently developing for its cars will be the heavy lifting for a humanoid robot, so without Vision AI, there would be no robot. ARK Investment still maintains that Tesla stock still has plenty of room to grow. Under ARK's bull case scenario, this network could generate $486 billion in annual income for Tesla by 2026. ARK estimates that Tesla's robotaxi network would generate $51 billion in annual income in the worst-case scenario. Additionally, Tesla generated about $54 billion in revenue in 2021, most of it from selling electric vehicles. The big question for investors is when Tesla will be able to commercialize fully autonomous vehicles, let alone a network of self-driving taxis that can travel between villages, cities, and countries. In ARK's worst-case scenario, a self-driving taxi network will be up and running by 2026. ARK Investment Management said the commercial releases of Waymo and Cruise not only boosted our current expectations, but also boosted fundamental improvements in artificial intelligence. According to the midpoint of our calculations, Tesla will begin marketing self-driving transportation services in 2024. Given ARK's positive outlook for Tesla shares, it's no surprise that the electric car company is the top holding investment manager in all of its ETFs. According to Kaufman data, ARK owns $1.43 billion worth of Tesla shares, making it the only stock in ARK's flagship ETF to perform positively over the past year. What are the views of other analysts? According to Morgan Stanley analyst Adam Jonas, Tesla is an onshore renewable energy infrastructure company, not just a car company. According to the expert, Tesla stock is cheap in this regard. However, after a 40% gain in the past year, not everyone is as optimistic about the stock. According to David Traynor, CEO of investment analysis firm New Constructs, Tesla's stock price could drop by $150 to $200 briefly. Tesla used to have a fast-moving advantage, but that's no longer the case, and there are plenty of other electric cars on the road that are competing with great success, according to the coach. Cathie Wood is only spouting words that might be attractive or interesting to unsuspecting retail investors with shiny things when they miss the point where Tesla is positioned competitively. Uncertainties aside, Wood's model indicates exorbitant profits. According to Tasha Kenny, an ARK analyst, the main factor is that Tesla is expected to be more capital efficient as a result. Tesla's capital spending per additional capacity unit fell to $7,700 from $84,000 in 2017. Meanwhile, while Tesla's Bitcoin holdings are included in the ARK model, it is not viewed as a significant projection item, raising the price target by less than 5%, according to Kenny. Alternatively, Tesla may pursue other business prospects not included in the model, including energy storage, artificial intelligence as a service, and humanoid robots. ARK has made its model open source, allowing anyone to modify parameters and run simulations. What do you think? Do you agree with ARK Invest's forecasts? Comment below.